Hey guys, it's Downtown Josh Brown. I am here to play another round of What Are Your Thoughts with my co-host Michael Batnick, who's here as always. Michael, say hello to the people.
Hey guys.
All right, we're going to get right into it right after this break. Stick around. Let's see what's going on. Okay, Mike, Fintoc. So this is this is TikTok, but they're giving trading tips and investment advice. And according to a new article at Institutional Investor, what's going on there is pretty terrible. Although it looks like a lot of fun. II is saying that the
What's wrong with fun?
Nothing. I'm down.
I'm all in. I'm all in on fun.
I have a TikTok account. All right. So II is saying hashtag Fintoc tag on TikTok has 42.6 million views. Stock Talk has even more, 97.4 million views. The audience is very big. Hundreds of millions of people use TikTok. But they're saying like most of the stuff that's going on there is just atrocious. It's like, you know, kids teaching each other how to trade options. It's like the blind leading the blind, people who have no idea what they're doing, making tutorials for other people who have no idea what they're doing. What's your take?
I have not dove in to Fintoc.
Okay. You're waiting to make your debut?
I love it. What's wrong? Honestly, what's wrong with kids having a little fun? Are there morons that are going to scam people, and are there vulnerable people that are going to be ripped off? Yeah, that's an unfortunate side effect, but like that happens in all financial channels. But I think that the more young people that get introduced to the market by probably the stupidest means possible at an early age is awesome. Get that shit out of your system when you're 22 years old. Right. And some people will learn faster than others, but in general, I think it's a good thing.
I think I'm with you on that. I was there when Finance Twitter started, and it was just as stupid. We probably were taking ourselves more seriously than the Fintoc people are. But like I invented Finance Twitter. I was there in like early 2009.
And did you also invent the question mark? That's a bold claim.
No,
I know you were early.
I definitely did. 100%. There were like 10 of us, and I was one of them. Yeah, Weisenthal, Howard Lindzen, Phil Perlman, Heidi Moore, Kelly Evans.
Co-founder.
Yeah, 100%. We invented it. All the conventions. It comes from a very small group of people that were talking about stocks, the economy, the market on Twitter. Most people in the industry just weren't allowed to. I think I had a loophole because I just decided I did. But like in 2009, if you were a professional working on Wall Street, you couldn't be on Twitter as yourself. So you had a lot of anonymous accounts. But you know what else you had in 2009 and 2010? Everybody was like running a trading school. So you had all these like, I guess like people posing as professional traders. I've met a lot of them. Most of them were living at home. But they were like giving trading lessons on Twitter, which I thought was interesting. This reminds me a lot of that. It's not very much different.
By the way, in 2010, I was trying to figure out what's the stock market, what goes on.
Yeah.
So I found a lot of these accounts that you were talking about on Twitter, and it took me probably 2 to 3 months to realize that people were full of shit.
Yeah, absolutely nobody can teach you how to trade on Twitter.
Yeah, to follow somebody and to see their lies and stuff. So I don't think, but I think people took that seriously. I don't think anybody's taking Fintoc seriously. I think everybody knows it's a joke. So I don't see like a huge danger there.
Yeah, and the other thing is like if you start taking a trade based on like somebody like giving out a stock tip on TikTok, and then you lose money, I feel like it's a good thing because you realize you're an idiot, and then you're like, oh. Yeah, maybe this isn't a good idea to follow traders into stocks without doing any research or without knowing what I'm doing first. I doubt there's like big money at risk based on TikTok trades. I think it's fine.
I don't think so.
Maybe I'll dive in there. Who knows? maybe I'll start putting out content there. All right, what do you got?
I saw a tweet from post_market. I wanted to get your take. There's a surprising number of Centi-millionaires who have created and captured generational wealth from companies that are still far from unproven to ever produce cash flow in any capacity. I don't know if this is inspiring or upsetting or neither.
So in other words, they already got the riches that would ordinarily come from building a profitable company, and they were able to skip that step because the product wasn't whatever the company was selling. It was
Forget
selling the
about
stock.
forget about profits. This person's saying like not even any cash flow.
Right, because what they're really selling
Ideas.
is they're selling stock. Like all the trappings of success, like they skipped ahead. Oh, we don't have a great product, but we have a great stock.
Inspiring, upsetting, both, neither.
Well, just can I say one thing? It's paper wealth, and if what they built is a mirage, it won't last. It's not like they can. It's not like they can liquidate $100 million worth of stock and no one will notice, right? So they kind of have to. If you built a company or a SPAC or whatever, you got it public, you built a big market cap because people are hyped up on whatever ideas you're pledging to execute, and you can't execute, you're not going to keep the money. So maybe it's a little bit of both. A little bit inspiring that you can do that, and then a little bit sad that like you didn't have to really do the hard work of building something with cash flow. You just had to sell people on an idea. But I don't think that it can last forever. By the way, it's nothing new. My first couple of months in the business, there was an IPO that just absolutely enraged people. It was called theglobe.com, and it was basically like people could create their own web pages. Like it was that's pretty much it. That was a big deal in 1998 or something. And I remember these two kids went on CNBC, and I think they were wearing wetsuits. I think like they had just been surfing, and they got behind a camera. And this is after the IPO opened up 500% or whatever. It pissed people off so much. The company didn't last. Like 3 months later, it disappeared. So I wouldn't get too frustrated about it. Where do I want to go next? Oh, can we just throw this Jeff Gundlach tweet up? Can we just?
Oh boy,
I don't tweet anymore, but my and I know Jeff, so I would have done it playfully, but my caption contest for this is Indiana Jones and the search for the lost yield. I guess this is part of
the
him
best
saying,
one that I saw was Economic tweeted Raiders of the Lost Alpha.
all right, that's okay. Mine's better. So I think this is like him basically saying I'm gonna leave LA for a better tax situation because the state of California is being mismanaged, and I guess it doesn't work well for billionaires anymore. I don't really know what the deal is, but I just want to say that Gundlach cracks me up. He's hilarious, and I guess when you're a Bond king, you do what you want to do. So
this is like I'm looking at this picture now. If you look at it, there's like a bookshelf in the background, kind of on the right-hand side. What the hell is going on? I mean, besides for the fact that he's wearing a cowboy hat in front of cowboys.
All right, the books are being reflected in a glass door. But where are the cowboys? Are they real or is that art?
But what is that backdrop?
Is
it a painting?
it a Marlboro billboard? Is it a cigarette ad? I don't know. I feel like he's got two different layers of glass, one on one side, one on the other, and they were what?
Is he pivoting to cattle futures?
This is so great.
All right.
He's the man. Anyone that wants to talk shit can talk shit, but he's the man. All right, what do you got?
All right. Ben did a post. Is Exxon the next General Electric?
Yeah, I read
so
that.
GE hit a market cap, a peak of $573 billion in 2000. It's still an enormous company, market cap of $55 billion, but it's 1/10 of what it was at its peak. So you've got ExxonMobil. Sentiment Trader showed that it's down 18 of the last 19 days. It's never had a worse 30-day stretch, just complete liquidation. Market cap peaked at 520 in looks like 07, 08, and now it's down to 150. What's the difference? Why is Exxon not the next General Electric? Because I don't think it is.
I think it will be, and I wouldn't have said that a week ago. One of my favorite relatively new podcasts is The Journal, which is done by the Wall Street Journal, and it's very much, I don't want to say a copy, but it's very much trying to do what the New York Times did with The Daily. So they call this The Journal, and it's really well done. It's highly produced. Like there's music behind every word that they say and all this stuff. But what they're doing is they're taking Wall Street Journal reporters who are subject matter experts, and they're getting the story behind, some things that are happening in the markets and whatever. So they did a whole episode on ExxonMobil, and this guy Chris Matthews, who covers energy for the Journal, great reporter, by the way. So he was saying as recently as 7 years ago, this was the largest company in the world. And I didn't even realize that. In 2013, this was bigger than Apple. Like this was the biggest company in the world.
2013.
Exxon.
It's not too long ago.
It's not, dude, that's like blink your eyes. It's yesterday. So in 7 years, the stock is now down 60% from its peak, even with the recovery post-COVID. But what Matthews is saying is that Exxon is doing something very different than the European oil giants. So he was saying like, okay, British Petroleum or BP, Total in France, and Shell, which I think is Dutch, they have all staked their future on renewables. And it's like they're not like going to stop drilling for oil and selling gasoline, but they have all said publicly, like our 20 or 30 year plan between now and 2050 is that this is going to be a renewable energy company. And it's going to take us a while to invest and build the infrastructure, but that's where we're going. Matthews is saying that Exxon's like, nah, we're just going to ride this out and energy, it's unavoidable that as the developing world, those middle classes grow, that you're going to need a lot more oil, a lot more gas, and we're going to be the company that sells it. And we're not getting distracted by fucking wind farms and solar. And so we'll see who wins. But like the European energy companies, they're like, yeah, listen, we're pretty much done with the oil and gas at some point in the future, and we're investing today on that premise. And Exxon's like, nope, this is an oil company. Deal with it. It'll be interesting to see, who wins. We won't know for a long time which was the right approach. But if you're an energy bull, like an oil and gas bull rather, and you want a pure play, don't buy anything else. Buy Exxon. This is gonna be the one. Now, it's interesting. They lost money 2 quarters in a row. You know when the last time ExxonMobil lost money 2 straight quarters? Do you?
Go on. No, 1931.
Never. 100 years, they've never lost money 2 quarters in a row. I thought that was interesting. So this is a company that's in big trouble. A lot of it is not even their own doing. I don't know. Stock looks like a falling knife. Chevron is sort of in the same boat, but this one looks worse.
Ton of debt. Tons of debt. And now losing money. They're saying like when the pandemic passes and the world goes back to what it was, that oil prices will bounce. Maybe that's right. And maybe this will be the stock to capitalize on that. I don't know if I want to make that bet. Every time you hear about an auto company, they're talking about the end of combustion engines. Like that's all of them. Not Tesla, like Volkswagen. You think that this is binary? Either this is a generational buying opportunity or it's going to fall by another 2/3.
You have to understand from my perspective, when I started investing, some of the biggest companies in the country were steel stocks. Like US Steel was in the Dow, I think, when I first began in this business. And Beth Steel and all these and we had coal company in the mid 2000s, the hottest stocks on earth to trade were all coal miners, like James River Coal Company. These things traded like tech stocks in the mid 2000s. They're all gone. Not one of them still exists. So do I want to say that oil is going to be materially different than steel and than coal? I don't know. Someone will figure it out. I don't think I'm smart enough. You want to know who might figure it out? Listen to a podcast with like Jeremy Grantham. He's got very strong views on the future of energy and oil prices, and I don't think he's bullish. All right, at least that's my take. All right, let's go into this. This is like some hopeful news. I was pretty happy to see this. The Wall Street Journal is saying that new businesses are being started at the fastest pace, I don't know if ever, but maybe ever.
Since I think it was since 07 maybe.
All right.
That was gonna be one of my questions for you.
Quote, applications for the employer identification numbers that entrepreneurs need to start a business have passed 3.2 million so far this year, compared with 2.7 million at the same point in 2019. And they say that even excluding those new filings among a subset of business owners who tend to employ other workers reached 1.1 million through mid-September, which is 12% over this year and the most since '07. So it doesn't offset the amount of businesses that are closing or will close, right? We can all agree that that's it's great news, but there's a lot of businesses closing. But I would say, like, this is that creative destruction that we talk about. And now you can get rent cheaper. You can find a lot of labor. So a lot of people looking for something to do. And you can build these new companies in the cloud and spend much less on infrastructure than you would have had to a generation ago. So I guess it's somewhat hopeful. What do you think?
There are going to be massive companies of the future that began in the pandemic. And this is the story of how a lot of these companies get built. I actually had a book idea. Ben and I were going to do this called Out of the Ashes, where we looked at the history of all these companies that were started during depressions and recessions.
Yeah, I feel like I've read articles about them, but I don't think I've ever seen a book about that. It's a great topic.
Yeah, there's a long list, and we never got around to it. Maybe one day. But anyway,
what happens is, like, it doesn't have to be a pandemic, but like a depression, a recession, and then, like, you have a lot of idle people who are creative and they have nothing to lose. Like, they lost their job and it forced them to say, you know what, my next thing, I'm going to do what I've always wanted to do. And this article is filled with stories like that. Like a guy who's fixing bikes in Madison, Wisconsin, in people's backyards. He's like, he doesn't have enough hours in the day for all the demand. Or a woman baking cookies who is able to rent a facility that she never would have been able to afford. And she takes a loan from her family members and just goes for it. Like, I know of people who have started business. I think it's really cool. I hope a lot of these things work.
So it's really terrible because recessions are bad because millions of people lose their job. Obviously, that goes without saying. And a lot of these businesses that are being started now will not make it. And that's going to be terrible also. But there will be a few home runs that come from this that we will all as a society benefit from in the future.
I think what a lot of the successful businesses that start will have in common is that these are businesses that, like, they will take advantage of the fact that so much can be done direct to consumer now. Like, a lot of the gatekeeping that kept people from starting a business, like, they'd be like, oh, no one's ever going to see it, or I can't process credit cards, or, like, all of that's over. You can literally start a business on a Monday and start selling things on Tuesday. And the cloud has enabled a lot of that. PayPal, Stripe, Square, they've enabled a lot of that. Amazon Web Services has made it so that you don't have to buy all this technology equipment to meet demand. You can scale up and down very easily and very quickly based on the demand you have today, and you can scale that up tomorrow as you need it. You don't have to start buying servers and stuff or places to store client data. So I think, like, the web has enabled a lot of what you're seeing right now, and then the direct-to-consumer piece using Instagram is unbelievable. And I can reel off like 5 businesses I've seen that they have no ad budget. They literally go on Instagram, and people that are looking for what they do can buy it directly from them. And there's very little friction in between. And so I think, 3 million new businesses this year. It's unbelievable. I hope we hit 4.
Harley Davidson and General Motors were both founded in 1907, 1908, during the panic then. McDonald's was founded in 1937.
Wow. Really?
Vanguard, 1974, during the recession then. The idea for ETFs was born out of the crash in 1987. So these horrible times give way to incredible ideas that eventually change the world, and I have no doubt that we're going to see that in this instance.
My wife's cousin started something. It's like telehealth, and he's been in the industry for decades, and he started this thing for in-home monitoring of patients. And he had the idea before the pandemic, and then the pandemic, he was like literally forced to follow through and finish building this thing out because people were calling him asking for it. They were like, oh, it's great that you can do these like medical alerts, but can you also include, all these other connections to patients, doctors, and this and that? And he's just like, now I have to do this because people are literally asking me for it. So hopefully that'll be one of these success stories. All right, that's all I got. You got anything else for today?
Yes, I have one more. I want to talk
right.
about some high frequency indicators, economic indicators from Bill McBride. So look at these charts I'm throwing up on Slack.
Bill McBride is Calculated Risk, one of the best economics bloggers in the country, by the way. Check his stuff out.
So this is TSA checkpoint 2020 versus 2019. This is plateaued.
Wait, what's the blue line? That's last year?
That's last year.
Okay, so this is the amount of people passing through the TSA?
Next, year-on-year change in seated diners.
Okay. Would you buy this chart?
I'd
buy Georgia.
It's in no man's land.
Right.
This one I think is totally, this one's in trouble. Movie tickets. There's no reason to go to a movie theater right now.
That's Exxon.
Like, I love going to the movies, but I don't love it that much. This one surprised me. Hotel occupancy rate. People are going to hotels. You got back to 50%.
Dude, I stayed at like a 5-star resort in Maine. It was wonderful. The only thing is, they told me not to book more than 3 nights, because they're not sending housekeeping into the room. So they're like, you're going to be on the same sheets and pillowcases for 3 days. You might not want to make it a 4th day. But whatever. We had an amazing time. What's this?
Gasoline supply. This came back big time.
Because driving came back. Driving replaced flying this summer for vacations.
This last one I want to show. New York City Subway.
Yeah, good
trending
luck.
higher. No, really. Look.
All right, great. Knock yourself out. That's not for me. 10% of Manhattan office workers are back as of mid-September. And most cities, it's more like 25%. And I think that specifically is because, 1, New York got it really bad, the pandemic. But 2, basically the city relies on mass transit. It doesn't work without it. You can't actually get into the city with a straight face on a regular basis in a car. So you need buses, you need trains, you need subways, and people just don't want to do it. I don't know. When does New York get back to 25%? Probably not until vaccine, no?
This crashed. This was 5.5 million. It's not even at 2 million yet.
It went to almost 0 according to that chart.
Yeah. It's going to be a while.
A friend of mine's a commercial realtor in Lower Manhattan. His building holds 5,500 people. That's max capacity. He asked the security guard the other day how many people checked in. He said 89.
Wow.
It's unbelievable. It's like the end of the world. And think of all the businesses that service office workers in Manhattan. Got to be 1 million businesses. What do they do? How long can you fight? So it's not great. Let us know what you guys think of these topics. We love your feedback. We love your comments. You frequently make us laugh or make us think about things in ways that we hadn't thought about them. Very important. Subscribe to the channel if you haven't already. You will get notified immediately when the premiere of the next episode of What Are Your Thoughts is about to begin, and you can be in there live chatting with us. It's like the only forum I have where I get to chat with you guys, and I love doing it. So make sure that you're a subscriber. Give us a like. Likes go a long way. We see a lot of other financial content on YouTube that, quite frankly, not as much effort and thought has gone into, and we think we're better. The only way the algorithm is going to know what I already know is if you guys do your part and give us likes, give us love. We're so desperate for love. No, truthfully, help us out.
Do you need a hug?
No, we're good. Listen, tell your friends about the channel. We are probably days away from breaking the 50,000 subscriber mark. It's an amazing thing. We owe that all to you. So if you like the show and you're into it, share it widely and come back next Tuesday for another game of What Are Your Thoughts? Michael and I will see you then. Thanks, guys.